Hey, it's Camila Stevenson, and around here we talk wealth. And what do you know? Italy's largest bank, the institution that sits at the center of European corporate banking, just disclosed a $26 million XRP position through a regulated trust structure. Now, that is not a treasury experiment. That is a position approved by a board, signed off by compliance, and executed through a fiduciary vehicle that doesn't exist for short-term trading. And we know that. But I do want to mention the size is not the biggest picture that I want you to pay attention to. It is the identity of the buyer. And that is what is important. And I want to walk you through what really happened and why a bank of this profile would choose this structure. And also why, of course, most people are going to miss it because it is a big signal. And most people are not looking at the signals. They're looking at the price chart. Now, go ahead and like the video and subscribe if you have not already so you don't miss the next video. And I want you to know this is not financial advice. Always do your own research. This is just for educational and entertainment purposes only. Now, drop in the chat also. I want to know if you are still accumulating XRP. What is the biggest cryptocurrency that you're loading up on right now? Maybe it's not XRP. Maybe you have a position there. Maybe it's XLM or HBAR or Quant. I love to hear what you are buying currently. I am positioning myself a little bit more in ZBEC, and I'm also buying a little bit of XDC. So again, let me know what you're buying. All right, let's lay out what is happening. Now, the Q1 2026 filing that surfaced maybe about a week ago or so disclosed that Intesa Sanpaolo, Italy's largest banking group by total assets, has taken a new position of approximately $26 million in XRP exposure through Grayscale XRP Trust ETF. Intesa Sanpaolo is not a fintech and they are not a hedge fund. It is the consolidated banking institution that processes sovereign debt for the Italian Treasury and is supervised directly by the European Central Bank through what is called the Single Supervisory Mechanism. That is a supervisory framework where the European Central Bank itself directly oversees the largest banks in the Eurozone, not a national regulator. When a bank with that profile makes a position visible in quarterly disclosure, what you're reading is not a trade, you're reading a balance sheet allocation. And how most outlets are covering it is just a casual headline about a European bank dipping a toe in crypto. But the surface story is not the real story. Here's what is being protected. A bank like Intesa Sanpaolo does not move on a position like this without an internal mandate that has cleared every layer of the institution. European banking supervision under the ECB is among the strictest regulatory regimes in the world. Every position a tier 1 European bank takes through a regulated trust has to pass the capital adequacy box, the market risk box, the counterparty risk box, the audit committee box, the internal compliance box, the custody segregation box, the legal opinion box, and the board level disclosure box. Every single one of those boxes has to be checked before that $26 million position could sit on a balance sheet. So what you're reading is the end product of a multi-year due diligence process, not a trader's bet. Okay. That means this is a thesis and the thesis gets stronger every day. Now, I want to address something that you may be wondering about the amount. Okay. So $26 million is not a lot of money for a bank with hundreds of billions in assets. So why does this matter? Well, position size for a tier 1 regulated European bank is not measured by absolute dollars. It is measured by the existence of the position at all. A bank like Intesa Sanpaolo does not allocate $26 million through a regulated trust because it expects a trade to pay off. It allocates that capital to establish a documented regulator approved audit ready foothold in an asset class it expects to scale into. Okay. So the first allocation establishes the legal infrastructure, the compliance workflow, and the regulator relationship. Once those are in place, the position can grow by orders of magnitude without triggering a new approval cycle. The first dollar is the hardest dollar to allocate inside a regulated bank. The next 100 million is the easiest part. And here's why the timing is important and it connects to everything. Well, the EU recently brought its full markets in crypto assets framework into force, which is called MiCA. Now, that framework created the unified regulatory perimeter that Tier 1 European banks had been waiting on before building disclosable positions through fiduciary structures. The Intesa Sanpaolo disclosure landing in the first full operational window under MiCA is not a coincidence. The framework lands, the legal opinions get drafted, the compliance workflow gets approved, and then the capital will start to flow. So, what does this mean at the system level? Well, inside Tier 1 European banking, position decisions cluster. So once one large institution clears the regulatory and compliance work to establish a digital asset position through a fiduciary vehicle, the peer institutions tend to follow within 12 to 24 months. And I keep coming back to this to let you know how it works, because there's some who will phase in after those who go first. So the risk officer at the next bank has already been asked why the first bank has a position that they do, right? So what looks today like a quiet $26 million disclosure by one Italian bank is often the leading indicator of a Eurozone wide allocation cycle. I'm not telling you when, I'm not telling you a number, I'm just telling you the direction that the math is always moving in. Architecture comes first, price comes second. We are in the architecture phase right now, and most people don't understand, architectural or infrastructure engineering and how it works. Now, here's what it means for you and your position. The largest, most heavily supervised banks in the world are quietly building XRP positions through the cleanest available regulated vehicles. The European corner of that build out just made itself very visible. The thing that you have to constantly come back to is whether the institutional allocation cycle keeps going. Okay. So you have to now wonder whether the institutions are building their positions with structural advantages that you don't have. Okay. So the part that a lot of retail are going to miss on that is when Intesa Sanpaolo built its position, they did it inside a regulated trust. Everybody knows how to put a framework around their allocations. That's the smart thing to do. That trust structure protects how the position is taxed, how it's reported, and how it compounds. Okay. So the bank is not paying capital gains every quarter while they hold. They are protected by the structure that they chose at the entry point. Now, of course, most retail holders did not get the same treatment or opportunity. They bought XRP inside a regular taxable account and probably never thought about the structure underneath the asset. And that's why I continue to bring this up, because it's the part that a lot of people miss. When you are smart, when you are wise, you're going to think about the structure that you're positioning these assets in. And I want to ask you something. If you knew the smartest, most regulated, most heavily supervised financial institutions on the planet were building their positions inside protected structures, would you keep yours inside an unprotected one? Okay, because that is what most retail investors are doing without even realizing it. The asset is the same, but the structure is not. The American retail investor has exactly one tax structure available that gives them the same kind of structural protection the institutions get, and that is the Roth IRA. So I Trust Capital is the platform that makes that structure available for real native XRP, along with gold and silver and RLUSD and other digital assets in the same retirement account. So once it's inside the Roth IRA, every dollar of growth belongs to you forever. It will give you a $100 funding bonus when you fund the account. And you got to think about, if you invest that $100, how much growth could you have with even just that one investment if you take the time to wait and to allow it to appreciate? And again, you don't have to pay taxes on that. So the link is in the description if you want to take opportunity of that. And if you're sitting there thinking, you know what, that sounds good, but I have no idea how to apply it to my situation, my accounts, my XRP position, and my timeline, then that is what a conversation is for. And I do have my clarity calls for that. I do not give you generic advice and just hand you a worksheet. No, we open up the real numbers and we look at your holdings, your structure, and we map out exactly what you should move where, in what order, how you should structure your assets and protect them from taxes. And we go over all of that. And so all of your questions will be answered. You will have a clear path forward and you'll know what you're looking for, because most people don't know what they're looking for and they don't even know what they want. All right. So we get you very, very clear. And the link is in the description for that. And if you do want to keep building with a room of people doing the same work alongside you, my coaching program is open. We do weekly support, live coaching, a community of wealth builders who are aligned and moving in the same direction. Trust me, it is an incredible community, and everybody in there is winning. They are in for the win for them and for their family. Okay. So the links are all in the description for that. Now drop in the comments and let me know, what is your number one asset that you're buying for the next month? You know, is there a new position that you want to start on something that you don't feel like you have a good position on, or are you just going to continue to accumulate XRP? I ain't mad at you either way. Now go ahead and like the video and subscribe if you have not already. And as always, I want you to stay wise, stay wealthy, and I'll see you in the next video.